Today is Thursday, the 20th of August, coming into the market open today after yesterday. Most indices closed technically higher in the day, although they did close down from their opens. But everything looks constructive for the most part. Really tight days coming in for the S&P, although it's struggling to or tried to push back higher above its 10-day, but failed. Looking like it may just consolidate a little sideways a little bit and wait for the 20-day to catch up with price. The 50-day held as support for the Qs yesterday and looks really constructive in terms of just kind of basing around here before another push higher. The IWM is struggling or just about holding its 10-day moving average, but similarly to the S&P, I feel like it just kind of potentially go sideways a little bit and wait for the 20-day and the 50-day to catch up before it pushes higher. But ultimately, the higher lows across the board, and everything looks totally fine and totally orderly in terms of a typical pullback in an uptrend. The Dow Jones is still kind of the laggard of the group, but ultimately really tight daily closes in regards to its open and close. So I don't really see any warning signs across the indices. And actually, the Kospi had a bit of relief day yesterday as it came into all of these moving averages, this convergence of moving averages. So ultimately, even though there has been a little bit of selling, it's been controlled and nothing really to be of a concern as of right now. In regards to the VIX also retraced the volatility spike that we had at the start of the week and is back below 15 or opening below 15 today, which is towards or at the lower end of its range. So nothing really, the fact that we just had this recent spike and it's come back down, I don't really see this spiking again so soon. So the big story from yesterday was the Treasury yield intervention, and even though it was just a small amount, it's been a clear signal for the market, and the dollar clearly reacted negatively and closed way below its 200-day and 150-day moving averages. So this is a clear signal for the market in terms of what it wants to do moving forwards. And the view that have held since the start of this move, since kind of this breakout on the 5th of August earlier this month, I viewed it as a purely technical move. But now I'm kind of I'm changing that view a little bit, and actually the fact that the market did react so strongly yesterday after the yield intervention, after the dollar came down, it is looking more like I'm swaying more towards it being both a technical move, but then also the fact that it's a safe haven play and kind of anti-inflation or inflation hedge. And there was always this reasoning that it was potentially anti inflation hedge based on the yen intervention that we had. But now it's just kind of confirms it more so. I didn't really have too much of a strong view on that. But now the fact that this has happened after the Treasury yield intervention, after the dollars came down even more, it's more clear that that's the case. I don't think it's going to shoot back up to highs or anything. I think is clearly a resistance area now. It did close just above this 200-day moving average, but ultimately, I wouldn't be surprised to see this area here act as resistance and it kind of cool off a little bit. And more importantly, as well, is in regards to the commodity space, is the oil's taken this high here, and everything it's above all key moving averages, and everything's kind of pointing towards further upside appreciation in for oil. And that the fact that that's coming at a time where the Fed's trying to bring inflation down, it's still not met its target. They've just had to do a yield intervention. It's not painting the rosiest of pictures for the Fed in terms of them being able to achieve their goals. They're trying to, I guess, fight fire with fire. They're trying to bring inflation down whilst there's clear inflationary pressures through oil, and also through their massive 40 trillion deficit that is only increasing at a rapid rate, and the more interventions that they do, the more that's going to increase. So it just seems like they're in a really sticky situation, and it feels like something drastic is going to have to be done. And I'm not sure what that would be, but it just feels like we're potentially on the verge of something. And the market seems to have kind of showed its hand in regards to crypto. Crypto is risk on. Bitcoin's supposed to act as a anti-inflation hedge. It never really, well, it has at times, but ultimately it's just traded like a risk asset. More so recently, I guess over the last cycle, as a tech stock. But the fact that this move happened after this intervention, after the dollar came off, fell down, came to the downside, fell to the downside. It seems like it. I guess it was technical as well. It was clearly technical. We had two inside weeks um, prior to this, and is holding support at the 200-day. But ultimately, this type of move after such a contraction in volatility, um, it just feels like the market is really communicating something with us right now, and that is that it's looking to go risk on. And this comes at a time after Bitcoin and crypto has been in a bear market basically since October, topped out in this area here, but basically since October. And it's a typical time frame for a new kind of cycle to begin. It got really tight here. It's been going sideways for a while in this range. These lows held beautifully, and now this push high and close above the 200-day. For me, that's confirmation. I was cool. I've been saying it this whole period since these lows failed to push, since price failed to push lower here. I was kind of calling the lows there, and now that we're back above the 200-day, I'm even more kind of confident in that view that the lows are in. And this move is definitely a signal. It's like when a move like this happens, it's something worth paying attention to. And the fact that it happened off of a catalyst, which is all the Bitcoin market needed, or the crypto markets needed. Saylor had been selling all throughout these lows, started here, been selling through here. There's been some other big sales through Mara as well, and it didn't push price lower. So there's ultimately been bad news not affecting price in a negative way, and the market was just begging for some positive catalyst to hit the market, and it did. And that's the reaction we got. It's a clear signal in my opinion, and the fact that it was seen across the board as well. ETH here was a bit cleaner and also had a massive breakout, and then Hype also had a huge move alongside Zcash as well. Just want to talk about Hype because Hype was one of the beneficiaries for the recent, or the White House crypto summit yesterday, and there was some positive comments around that, which is why it had such a strong move. It was performing quite well anyway, and then when this news hit the market, it just went even higher and ended up nearly 24% on the day, which is a huge move. So ultimately, it looks like the crypto market's poised. And why I feel this is even more significant is because this has happened at the time where it seems like the AI trade is dwindling. And there was a little bit of relief, or attempted relief at the start of the week, but in terms of breakouts for kind of software and AI stocks, but they retraced their moves on Tuesday and Wednesday. So the fact that there's no real kind of leading narrative in the market as of right now, it feels like all eyes will be on crypto, especially after these moves that we had yesterday. So it feels really, really constructive in terms of this being this being the return of some momentum in the crypto markets. I would say one thing was mRNA was another kind of, I guess, story yesterday in terms of the results, the phase 3 results that came out in regards to their cancer treatment. So that is potentially another story or another theme that could be lining up, as a lot of biotech in the healthcare industry. I saw a lot of movers yesterday, a lot of strong charts yesterday, so that could be a new narrative. But ultimately, I feel like that's kind of recycled goods, in the sense that it would be kind of riding off the back of AI. And if AI is not doing too well, then I wouldn't expect it to be anywhere near as strong as what the AI trade was. I could definitely see it being a narrative, and for the market to bid into it, to buy into it. But ultimately, I think the real story here is the crypto markets. So just coming on to breadth, the number of stocks making new monthly highs had a massive move yesterday, 89% move, alongside number of stocks making 52-week highs also pushed considerably higher, and that coincided with the number of stocks making 52-week lows coming down back below 100. So beneath the surface, even though there wasn't anything, any kind of major buying or anything, it was actually a little bit of selling from the open yesterday for indices. Beneath the surface, that's what's telling the story. So clear strength beneath the surface, and then just to support that further, Stockbee's primary breadth indicators, number of stocks above, making 4% gains and above on the day, 546. That's a pretty solid reading to come in, especially after two red days, or sellers being in control. So that just confirms the view that I've had, that so far it's been controlled selling and it's an orderly pullback in an uptrend. And the last point to touch on is bond yields, based on yesterday. As I guess you'd expect, if there's a yield intervention, yields are going to come down, and that's what happened for the 10-year and the 30-year. More importantly, that came down nearly 2% for the 30-year and closed below its 20-day moving average. And it feels like that may be the end of this move. It's there's no further interventions planned until November, but the fact that it's happened is a clear sign that the Fed's looking to control yields, and they're not going to let things get out of hand too much. So it makes sense that actually this is the end of this move. And I guess, yeah, what the market's communicating with us is looking to go risk on. So ultimately, a reversal from my bias that I've held throughout this week. I'm cautiously bullish, and I'm definitely bullish in regards to crypto and risk assets moving forwards. The reason that I'd remain cautious is just because, in regards to the indices, we're not at new highs yet, and we're below the 10 days for pretty much everything. And until we're back above the 10-day and kind of pushing to new highs, that's when I'd just be bullish. But for now, I'm still cautiously bullish in regards to just the general market.